Oliver, another round of fines for the global banks today, this time for rate manipulation in the foreign exchange market. I must confess to you, I have trouble thinking this is news. After round of fines for violation after violation, I am extremely tempted to just shrug my shoulders.
Well, you wouldn't be the only one shrugging your shoulders, and in fact, if you look at the share prices at some of the banks that have been fined today, they're up. The fines weren't as big as people expected. But I think you're wrong to shrug your shoulders, and I think people are wrong to mark the shares up today. It's a big settlement, it's a very serious settlement. It's in all, about $6 billion worth of fines have been levied today. That's all shareholders' money. That's money that's not going to, for example, strengthen capital. It's not going to be used to back new business. It's not going to be used to
pay dividends,
for example, or share buybacks. This is money that's going to who knows where. It's very opaque as to where the fines go. What's also concerning is that it's a big sum, and it's not exactly clear how it's been allocated. Lots of different agencies in the US and the UK have been dipping their hands into the honeypot today. A few $100 million here for this bank, a few $100 million there for that bank. Very unclear as to how these agencies have come up with the actual amounts of fines they've levied today. It's very opaque.
I take your point that it looks random, and that's bad for shareholders who like certainty into the future for obvious reasons. And I take your point that the total number is very large, but it is spread out over a lot of institutions. And it seems to me one straightforward question would be, is this a big enough number to significantly damage the capital ratios of these banks?
No, in most cases not, although Barclays has had a very big fine. It's already taken provisions for all of that. If you look, for example, at UBS, which today has had total fines across LIBOR and Forex of about $550 million, it doesn't make much of a difference to capital at all. It damages it's a couple of percentage points of their total capital amount. It's a couple of percentage points of their
So I'm back to
profits.
shrugging.
But you shouldn't be, because the question really is this the end of it? You might be fine to shrug if you could be sure and say, actually, this is it, and I know this is the limit of it, but this is absolutely not the limit of it. You look at the UBS annual report, there's 10 pages of litigation and other contingent liabilities. Look at the Jaypee Morgan annual report, there's 7 pages of it.
And I suppose it's not just fines for past behavior, but the fact that shareholders and the market shrugs at these fines means there might be more bad behavior in the future. In other words, while the market is shrugging, are the fines really incentivizing better behavior?
This is it. The banks say all the right things. They say this is not consistent with our values and all this kind of guff that they come up with, and they have these codes of conduct and that kind of thing. But you wonder, has it actually changed things at the bases? The people who are doing the trading now, are they still operating at the very edges of what is legal, or have the management managed to pull them back? And it's hard to have any faith that these situations have really been ironed out. Maybe the banks might say we've had a quarter or two with no new provisions. As a shareholder, I'm not going to be comfortable until there's been a year or 2 or 3 with no new provisions, not a quarter or 2.
Thanks very much, Oliver.